Okay, and we are recording.
Now no one's speaking.
Well, we got 2 minutes left until, has everybody, the rest of the participants have been let in yet, or we're still waiting to invite them in?
Yeah, let's see here. They should be able to come right in as of now.
Perfect. So
That way I don't have to worry about somebody getting stuck in the waiting room while I'm not paying attention.
that makes sense. I feel like that happens all the time when I'm using Teams.
Yeah. Hey, Joanne.
Good morning, John. How are you?
Good, good, good
Are you
weekend.
going? Yeah, too short as always.
Yeah.
Yes, yes. Are you going to impart us with knowledge today?
That's why I brought other people along here so that they can impart their knowledge.
Yeah, I hear you. I hear you. So you've been good?
Yeah, everything's going well.
Yeah, you have to be happy this week, right?
Yeah, finally the market's turning around a little bit, although not so much right this very second, but we'll see where we end up. It varies minute by minute these days.
Yeah, that's for sure. Yeah, you can't outguess it, it seems these days. So,
Yeah.
yeah, yeah. Yep, we've been pretty busy. We're getting ready to head to London next week.
Oh, yeah, we're actually headed that direction a couple weeks from now. So,
Ah, okay. Ah, cool. Are you headed to England at all or other parts?
yeah, we're just gonna hit. We're gonna go to Venice, Rome, Florence, and then head over to Paris. So,
Oh,
I think we're
okay.
we're in London for like an hour.
Oh, okay. All right. Yeah, we're there from the 27th to the 5th of May.
Oh, good. See some
Yeah,
grandkids, right?
yeah. Babysitting Teddy. Yeah.
There you
So the
go.
kids can go to Spain.
All
Yeah.
right, let's see here.
Yeah.
We give it a couple more minutes.
Okay.
And then John, you may be the only person who can mute people. I'm looking on the participants chat right now. I think you may
Okay.
be the only person who can do that. So I'm not sure if it's here we go. Yeah, I don't think I can do
And I'm just trying to figure out how.
it. If you go to participants,
Okay, I'm there.
and then you'll see on the right where participants are, you'll be able to click the mute button and their video button. In theory, it shouldn't allow participants to show video and microphone in theory, but that doesn't always mean the case with Zoom. Sometimes it glitches.
Got it. Okay, the first try did not work. I'll try something else. Nope, that didn't work either. Oh, that could be a problem. Let me see here. One would think I would know how to operate Zoom by this point in my life.
Forever changing excitement.
It's great when it works, not when it doesn't.
Right. Yeah, exactly.
All right. Anita, what do you think? Give it 2 more minutes and get it started. Does that sound fair?
Yeah, whenever you guys are ready, I'm happy to kick it off.
We feel strongly that this agent committed second-degree assault against. Oh, I wish I could figure that out. Hey, hey,
I'll do
Joanne,
housekeeping at the beginning.
Yeah.
Make sure.
can you mute things on your side?
Oh, let me see.
We're just hearing a little bit of background noise. That's all.
Sorry.
No worries.
I have the TV on. Sorry. I was watching Fox News this morning. Sorry.
Yeah, there you go.
There we go. Okay.
All right. The link reminder is what worked for me.
The reminder, something's wrong with the reminder.
Hey, Josh, somebody put in the chat here, thank you, Pamela, saying that there was an issue with the link. The reminder is what worked for me. Can we just check that link to see if maybe there was an issue, or just send that link out? That may be why we're having some not as many people jump on here first blush. You're on mute too, by the way, Josh. Let's see. Okay. The host is not allowing participants to unmute themselves. Okay, so the muting thing did work, by the way, John. He can't unmute himself, so he's just messaging me. Let's see here.
Who? John can't.
No, it's good. Josh can't speak.
Oh,
So he's muted. So good. It sounds like that worked. It says the host is not allowing participants to unmute themselves. I think we're good there. I'm just asking, please check the link.
I just went out and asked Christine if she had trouble, and it looks like she was having trouble with that too. So
I wonder what link it is that's not working, because there should be a link that is getting through to the webinar, and then from the webinar link, there should be another one that they clicked into for the Zoom participation. Oh, weird. It says I had another meeting going on. That's weird. I wonder if there's another link out there. I don't think so. It doesn't make any sense. But it says, Pamela, thank you, by the way, says when I try to log in to the host had another meeting going on. So I wonder.
interesting.
Josh, please, troubleshoot while we
All right,
get.
guys, we will get it started here in a minute.
Yep.
We're just trying to make sure everybody that wanted to get on could get on.
All right, I'm going to have Josh troubleshoot as we're getting started, just so we can obviously respect the moderator's time, everybody's time. And then what we'll do is, we can obviously I'll send this out as well. But as Josh is messaging me on the right-hand side screen here, I'll keep us updated if there's anything we need to do. But it sounds like he's working on it right now as well.
Okay. All right, so let's get this kicked off. Good morning, everyone. Happy Monday. Hope everybody had a lovely weekend. So, welcome to creating wealth and opportunity through home ownership. And today, what we're going to do, we're really going to break down home ownership, how home ownership can be one of the most powerful tools to build wealth when doing it strategically. And so we have a great panel on board today to give you all of that wealth of knowledge. I'm just quick. I'm Anita Patel. I'm a trusted technology advisor, and this is all my friends and great wealth of knowledge that I always lean on to any questions that I have around insurance, lending, and financial help. So if what we'll do is we'll go around the table, get some intros. So if each of you can give us a 60 seconds, sorry, not 60 minutes, because
60 minute,
want to
maybe
be
a little
on
bit
here
low.
we don't want to be on here for the whole day. Who you are, what you do, and a little sort of quick what things homeowners often get wrong, and then we'll go into the questions, and then just a little bit of housekeeping. If everyone can stay on mute, we do have a Q&A at the end, and so just pop your questions into the chat box and we will look at it and we'll make sure we can answer some questions at the end as well for you. So who wants to go first? John, do you want to go first?
Sure, I can go first. My name's John Browning, and I own and operate Guardian Rock Wealth. And our base of operations is in West Palm Beach and just outside of Chicago in Lisle, Illinois. But we have clients from Hawaii to Maine and everywhere in between. And we focus on the full wealth management picture. So, not just your portfolio management, but also your tax picture and things like we're going to talk about today, like your home ownership and how that can actually build wealth and still provide some liquidity, which we're going to get into later today. But our motto here is the idea is to build a life, not just a portfolio. So money is just a tool, and if used correctly, you can make it into whatever you want your life to be. And the trick is, how do you use it correctly? And we're going to talk a little bit about that today on the home ownership side.
Thank you. Frank?
Frank, you're muted. Frank
Okay,
is muted.
let's go. Rodolfo, you go first, and then we'll get Frank off mute in a minute.
Yep, not a problem. Hey, everybody. My name is Rudy Romero. First and foremost, Anita, thank you so much for being on here today. She's a great moderator, friend. She is a trusted technology advisor with Minerva Tech. She's the boss lady and then one of the number one people I call when I have headaches with technology because she knows what she's doing. So I'm the owner of the Bedford Group Insurance. Obviously, thank you everyone for having me. It's been an honor to be here with you today. My passion has always been centered around helping people and protecting things that matter the most, whether it be in law enforcement, in my career in home building. Being thoughtful, dependable, and having insurance solutions has been my number one goal here in the state of Florida and throughout the country. Throughout my career, I've worked not just to build successful businesses, but grounded in integrity, relationships, and genuine commitment to service, because that is what we're all here for, is to serve each other. I believe that when you lead with trust, you put people first, you create something that lasts as long as a relationship can, and hopefully that's forever. I'm grateful for the opportunity for you all to be here today with me and working with you guys and gals, because this is one of the best groups that I've been dealing with. And I look forward to showing my experience and being a part of this conversation on how we can help homeowners here in the state of Florida and beyond.
And I am helping Frank get unmuted, but this is entirely on my end. For some reason, he can't unmute himself. But we're going to have, as I work on that, Frank is an important part of this group today because he has a really key part in it. But let's go ahead and keep going. And Frank, I apologize. I'm getting you unmuted as we speak, and we'll come back to that. Apologize for that, folks.
John, maybe just try and unmute everybody first. Take that whole setting off, and then we'll just get everyone to mute themselves.
Oh, hey, there we go. I think I got it fixed. Frank, can you do that now?
Oh, there we go.
Done.
Back online.
Sorry about that, folks.
Yeah, no problem.
Our trusted technology advisor helped us. You see?
Yes.
So short version for me, Frank Trimboli, CMG Home Loans. I work for one of the largest non-bank privately held mortgage companies in the country. We have over 1,000 products and programs. Like John, I can lend all over the country. I believe one thing that really differentiates me after being in the business for 27 years, working for a large bank for 24 of them, Working for CMG now, with all those products and programs, I have one particular product that is a proprietary product and is approved by federally, and we're backed federally. And what this product is, it's the only product that exists that pays principal before interest. So, short version is we take the bank out of play. You become your own mortgage banker by paying principal before interest. You hold your own money, you build your own wealth instead of helping the bank build their wealth through upfront charging us interest while holding our money. That's my version of mortgage banking today. Building wealth through your mortgage.
Yeah. So I love that actually. So three amazing people here, and I hope we give you lots of golden nuggets to take away for just around as John says, money is a tool, an enabler, right? And then lending and principal before interest, which we all love. And then Rudy's insurance, which is, all of that covers us, that we can walk the streets and be in our houses safe and feel comfortable that we're covered with everything. So we have your back here with everything. So it's great. So we've split the session into a couple of segments here. So first of all, we really want to go into the foundation of wealth through ownership, how buying a home builds wealth beyond just having a place to live. So I'm going to go right into the first kind of question here is, what does buying power actually mean in today's market? I forgot who I need to send that to be honest. But anyway, whoever wants to jump in, please do.
It's probably a question
Well,
more for Frank to get
yeah, I
started.
can I can wing that one. Well, we all think of buying power. How much can we buy? Purchasing power. If we're traditionally giving a bank 43% mostly of our mortgage debt, 43% of our disposable income goes towards mortgage debt. What's the most important thing to us traditionally when it comes to buying power? Well, traditionally, all we know, 30-year fixed, or the way the mortgage banking has been for 83 years since the Great Depression, interest first, the banks win. What's the most important thing in buying power? It would be interest rates. So here we are, we're all have a tendency to wait for interest rates to come down because we want to qualify for more. Well, if we could flip that script and you take more of your money, applying it towards principal while building wealth with John and Rudy by your side, um, taking that wealth and building it, I can help you with the purchasing power because why? You're paying principal before interest. It negates my product, virtually negates interest rate. It allows you to buy more while keeping more of your money to build wealth. I winged that a little bit, but
Yeah, and I think too, a lot of people think of buying power as, your income. But Frank, correct me if I'm wrong, it is also about your assets that you have, because your home is, of course, the number one asset. So that's one that's the piece of collateral that you're financing, but also your other assets can help increase your buying power as well, right?
100%. Great point, because we have something called asset depletion. You're not taking your assets, but the lender, us, we feel if you have the ability to have been responsible enough to build those assets, non-mortgage related, in your portfolio, in your stock portfolio, doesn't have to be liquid. We can use that towards qualifying without collateralizing it. Your money still stays invested for you, but we know you have the ability, so we'll give you more purchase power. That's a good point, John.
And so going on to the interest rate part when you're buying, and I think there's some misconception there when it holds people back, right? So what would you advise around how when buying versus sort of also renting, right? And then the interest rates. How are we looking at that in the bigger picture, and what's the misconception there that you often see?
Right. We all know in the renting world, you're renting, obviously. I mean, some of us are landlords, so we do like when, somebody's renting our house, they're paying our mortgage, right? So, we have to rent at some point in time in our life, historically speaking, but the goal should be to go from renting with a plan to be pre-approved and qualified for a mortgage. But to your interest rate question, everybody, again, the overall picture is what is the most important thing to you, every consumer in this country? It is interest rate. But where I get to come in and I say, well, while interest rate is important, even if you have 3% on a 30-year fixed COVID interest rate, that means you have about 26 years remaining on your property. Well, that's great, 26 years. But do you want to pay 3% interest for the next 26 years to own your property 30 years later? Or which is a front-loaded interest, that's traditional mortgage banking. That's when interest rate is important. Or pay principal before interest. Oftentimes you have an interest rate less than 1 or 2.5%. Why? Because you're not paying the upfront principal. So the conclusion of the rate would be, is it interest rate that is the most important thing to you, or the amount of interest dollars you're paying on your mortgage? I would have to say it would be interest dollars. What could you do with those interest dollars you're saving? John, what could you
Yeah,
do with those?
that goes on really nicely to my next question. So, John, is like the financial planning perspective, right? So we're thinking about, okay, we have this much money, we want to buy a home, we want this asset. Um, that's how we all are living. We're like, this is how we've made it in life. We've bought our property and we own it, or whatever it is, of certain years down the line, right? So, in terms of that planning aspect, what's the strategy around that? If you can talk about some of those, yeah, just strategies and tools of what we should be thinking about when we're buying a house or we're buying a second house or whatever it may be.
Yeah, I think it's a really important part of wealth management that most people, I'm just going to say, I'm not going to stereotype everyone, but most people, I think, get a little bit out of whack because the home ownership portion of our lives becomes a little bit of, it's in here, it's in our emotional state, right? It's
Mm,
an emotional asset. We own it, we live in it, we spend all our time in it. But if you look at it from a wealth management perspective, you can do a lot more with it, especially if you understand and talk to Frank about the all-in-one mortgage, where you're paying principal first, and you always have access to the equity that's in your home,
mm,
because you can't take your house to the grocery store and buy groceries. Very hard, right? You can't do that. And if you do, say you do need to sell it for whatever happens in your life, and this is where Rudy comes in, the things happen. If you were to have to sell it, or if you really needed the equity that was in that home, you'd have to apply for maybe a HELOC, or you'd have to pay them first. So you'd have to wait until a buyer came along. You'd have to work with a real estate agent. You may have to fix up the home. Very difficult because it's an illiquid asset unless you use the wealth management strategy that Frank and I use together, with the all-in-one mortgage wrapped into a full wealth management strategy. And if you do that correctly, and you're looking at your, not just your interest rate, but as Frank was talking about, the number of interest dollars that you are creating, or that you're using to maintain that mortgage, then you can do some significant good things to your overall wealth management. You
mm,
can increase your buying power, you can increase your wealth overall. And frankly, at these interest rates and the real dollars that you're spending, you can significantly increase your wealth just by utilizing the asset in your home. And it's, many people get upset and they say, well, I don't want to leverage my home to buy, high risk assets. And I 100% agree with that. But the strategies that we use control your risk, and at the same time can allow you either to purchase a business asset for your business as you need it, when you need it, so you don't have to go through maybe a bank loan process or something like that. It can also allow you to buy an asset that is producing income far and above the income that you are spending on the dollars you're sending to your all-in-one mortgage. So just a lot of different ways to think about it in today's world that has changed a whole lot over the past 30 years from the traditional mortgage only perspective, if that makes some sense.
So I think from a layman's term, what I'm hearing is that when you're buying something, the equity, you can use it to, like, your dollars will be used more for something else in terms of, and so like when we say we own a house, it is something great, but also most people think of it as a great liability or it's like a big debt, right? So we're flipping the switch here, I'm assuming. So you've got the equity there, and then allowing you to have that buying power as well to buy other assets and less interest as well. Frank, you've got your hand up.
If I can add into that, John, very well said, and Anita, you backed that up correctly. Yes, but how about if you just wanted to pay off your mortgage and not invest with John,
Right.
or not use these dollars? You just wanted to achieve the American dream instead of at 3% COVID rates for the next 26 years or 7% after COVID rate for the next 30 years instead of paying 153% interest compared to principal over the life of your loan, how about we show you a tool to have your money work for you dollar for dollar, whether you invest it or not? You change none of your debit and income habits. You're just allowing your money to work for you. You're taking the bank out of play. So by paying interest before principal, you just doubled, tripled, quadrupled your wealth. It gives you financial options to call John, have him put you in a fixed fund,
Yeah.
or put you in the market, or do nothing at all, and you just achieve the American dream in one fifth, sixth, seventh of the time by just taking the bank out of play. The bank's making billions on our interest by lending it back to us. We
Yeah.
just have a solution, and it gives you financial options through your mortgage.
Yeah, I think that financial options is a really important part that, Frank, I'm glad you brought up because I kind of forgot about it, because it's not just about building your wealth, but creating financial flexibility through this tool actually reduces your risk substantially. And once you get your mind around that, you get a lot more comfortable with the home ownership process.
Yeah. And I think there's got to be a mindset switch, right? But also, I think ultimately people want a. You're right. It's the American dream. Or the dream in general, actually, to be honest, is that you want one paid off property in your life, right? So that gives you that stability and everything else. So I love
Yep.
that. Anything else you want to add to that? I do want to move on to the next segment. And protecting and maximizing your assets, which is kind of like what we sort of talked about a little bit anyway. Um, but so, Rudy, did you have anything else that you wanted to add into that on your side?
Yeah, I mean, at the end of the day, and John and Frank are the two that will really lead the charge here.
Yeah,
It's not just about a monthly payment, right? It's an overall number, right? Because that's what everyone gets stuck on is a monthly payment. Our hope here at Bedford is to help you reduce that monthly payment, but also increase protection. And I think we're going to get into it a little bit, but
yeah,
protection looks different to everybody. There is not a one size fits all, and there is not a, hey, you have to deal with everything or nothing approach. And that's something that's a misconception here in Florida, especially that you don't have a choice. You do have choices. You just need to make sure you're careful with the choices you make because there are a lot of agencies and there are a lot of carriers out there that are either new in the market, don't understand the market, or don't know how to utilize the tools they have, just like Frank and John just spoke about, so that they can make sure they maximize your options, whether it be a lower price, whether it be better protection, or a combination of both, so that you can spend that money on retirement,
hmm
on the kids' birthday parties, on opportunities outside of just paying for that asset. And that's the hope here at Bedford.
If
yeah,
I can add and back off, add two Rudy's is one thing I've learned even after 27 years and 3 years having this product is again when I'm refinancing people off 3% interest because they're going to pay it off in 26 years with my product paying it off in 6 or 7 years. I also have the opportunity to grab Rudy and his team. So here I am doing, the transactions are increasing dramatically just from this product alone. But one thing that light bulb moment for me in the past or recent past is they get to go through Rudy and his team, and they've never even looked at their insurance. So here we are saving them. We're paying off their mortgage principal first. We're taking some of their money or cash equity, whatever it may be, giving John the opportunity to make them more on building their wealth. And then here we have Rudy's team giving them lower numbers rates on their insurance policies, saving them an extra, several $1,000s a year potentially. So
yeah,
it's been a win-win just through, for me, it's product based, principle first. But when we collectively get together, it's a whole holistic approach to really look out for these consumers.
Yeah.
Yeah,
And it's a
if I,
great ecosystem, right? Because you're kind of still saving money and you're pulling back again. And it's like you can spin that so many times in that ecosystem, which is great. You can rinse and repeat so many times.
Absolutely.
yeah, and
John?
I think Rudy, hopefully I'm not stepping on your toes here, but this is as I look at folks from the entire wealth management picture, the insurance side of things, right? None of us like to talk about it. It's probably one of the most misunderstood and misused things that I deal with, because sometimes I look at when I'm looking at a whole wealth management picture, I find that they're either underinsured, but then sometimes I actually find that people are over insured or they're insured for the wrong things. And it gets extremely complicated, especially, I mean, in almost all insurance, it gets complicated, but especially with home ownership, because the insurance companies, frankly, I'm going to pick on them for a minute. They'll have all these little riders. And do you need that rider or do you not really need that rider? And that's where Rudy comes in and helps you decide based on where you are, what you're insuring, and what happens in that space, what you should be insuring and what you don't really maybe need in that spot. But Rudy, correct me, I'm speaking out of turn here. Something that's not my zone of genius.
No, no, you got it. Me and John did a podcast not long ago. We talked about that. Is unfortunately, not all insurance is created equal, and not every agent is an owner, and not every owner has a home, right? So, understanding the idiosyncrasies of the Florida market, just the insurance market in general, is going to give you a huge leg up. And there's a very big misconception of the use of agencies means I'm going to pay more. The brokers assess fees. They do this, they do that. That is just couldn't be further from the truth, especially on the home ownership side. Most homeowners that come to meet with us save between 500 to upwards of $4,500 a year. It just depends. And I hate to say that I'd love to see bigger numbers because it makes me feel bad for people when they do see a $3,000 to $4,000 savings a year, because that entire time, that's almost a $250 to $300 a month payment extra to their mortgage if they're paying it out of their escrow that they're going to go see taken off of that. And it hurts my heart to think that could have been, that's gas for two vehicles in a year, depending on if you're driving a Prius, right? Could be more. If you have an electric vehicle, it could even be more, right? So that opportunity to have that ability to go on vacation that you didn't think you were going to, or extra presents under the Chris Mahana Kwanzaa tree, right? Again, these are all things that should be more important than just paying for insurance you don't need or that's not going to back you up when you need it.
Yeah. So we have kind of got into the next segment around the insurance piece, protecting and things like that. So what how can insurance actually play a role in protecting long-term wealth? I know you've talked a little bit about that. And then some of the like smart strategies.
Yeah, that's a great question. So first and foremost, from a home ownership standpoint, let's pretend we have no rental properties, anything like that. Just from a home ownership standpoint, it is so imperative that you have liability protection. I know everyone gets caught up in the word hurricanes, any other perils. There are so many other things in there. First and foremost, before Mother Nature comes knocking at the door, the closest thing that could cause a concern is going to be the neighbor coming over for the pool party, the kids coming over for the birthday party, right? Accidents are going to happen. So having the liability limits that work typically between 100,000 to 500,000 in coverage, that's going to be your number one threshold, right? So if something was to happen at your home today, could you be covered? If somebody who's a plumber slips and falls, do they have the right policy in place? And if they don't, do you have the ability to protect your assets from somebody who may be trying to take them when an accident occurs? That is number one, more statistical probability that's going to happen before your home falls down, right? Living in the state of Florida, we're blessed to have essentially concrete bunkers, right? Our homes are most of them are made of CBS from Okeechobee down south. So with that said, the likelihood of your home just falling down today is statistically less probable than somebody coming on your property and getting hurt on it accidentally or on purpose. Next would be dwelling, right? The dwelling coverage, that is something that John and Frank are going to be intimately working with. How much your home was worth at that point and how much asset you have to work with. Now, insurability is different. How much it costs to rebuild a home is different than it costs to build the house. Also doesn't include the land. So again, when you're speaking to agents and agencies and having a conversation about the dwelling port of your policy that we call coverage A, it's imperative that you don't overinsure. I promise the insurance company is not going to give you more money because they felt great that day that you are accidentally had a fire or something that transpired. They
Mm.
don't just break out their checkbook and say, hey, we just want to love on you even a little bit more. They're going to love on you the amount that your dwelling coverage or the amount called the RCE, the replacement cost estimator, is going to allow. So, how do these other agencies end up doing it? Why do they give you more dwelling coverage? Well, hey, everyone, are you surprised to know that that's part of their commission and that's how they make the bulk of it is on the dwelling coverage? Surprise, right? That's how they're going to get you, right? So, having proper coverage is paramount. So liability, right? It's number one. Number two is going to be your dwelling coverage. And number three, we have to talk about it because we're in Florida, hurricane and any other perils, right? Hurricane protection is not all created equal. There are deductibles, there are percentages. There is no perfect number. This is where you meet with John, your financial advisor, and you say, hey, John, I could stand to lose 50 grand to save $2,000 a year, which then gives me more buying power with Frank so that when I purchase a house, now I can purchase something that's a little bit more expensive, right? Because you saved a little bit of money. So knowing what that third piece and how that whole in the entirement, and again, there's content, there's all of the things in between there, but your three biggest drivers are going to be those three items and making sure you may not need hurricane protection. But again, let's make sure, let's see where you are. Let's see how much it costs because there are policies that provide no hurricane protection that may be only $1,200 versus the $11,000 you're paying now if that's totally out of your price range. Make sure you're speaking with us and having frank conversations, literally and figuratively frank conversations. Because if you're not, right, you're not able to articulate this in an honest manner. People are telling us they want the cheapest insurance. You don't want the cheapest. You just can't afford this amount. And that's okay. There's nothing wrong with that, right? It's about coming up with an option that works in your holistic program. And it doesn't sound silly. This isn't for somebody who has $1 million house only or a $5 million house. Whether your house is 100 grand or 100 million, the theory is all the same. The difference is just the players on your team, and you just need a team.
And I love that because, Rudy, I think that there's so much noise in the market around what insurance you should have, what you shouldn't have, how much you should pay, and what you should be covered with, right? And it changes every day, probably every hour. So if I was to go out and do my own thing, I would have no clue what to do. I'll probably go, okay, well, I need everything, and then I'll be paying so much money every month, and then that kind of then my saving or like financial kind of piece would be totally dented. And so we're not really playing an even game, right? So it's kind of great that you have that in-depth knowledge of and work together with your clients to go, okay, what liabilities do you actually need? How much can you afford? How much can you pay out of your own pocket? Things like that. So we can really go down and drill deep and work out what really works for the individual depending on their income and what they want to do. And then obviously crossing over to John, it's like that financial piece. So how much do we want to work? Um, you know, anything like in terms of money investing, and so we go on to like equity, and so how do we leverage our equity over time, that financial strategy. So there's so much there, and there's so much noise in the market when we go on to Google and or even ask ChatGPT. I don't think that this first-hand information you're going to get it from anywhere really. It's really important to talk to your advisor and say, this is what I need and this is what I can afford, and then you drill down to the products and everything else. So I love that.
Yeah,
Thank you.
need and wants, right? And I think John
Yeah.
and Frank can speak on this. What you need and what you want are going to be two different things. I would love to have X amount of protection because it would make me feel better, but I
Yeah.
only need X amount of protection because that's what I actually need. And that's where the Florida market is differentiator to the rest of the world, where we need to make sure that advisors, agents, owners, whoever you're speaking with who wants to be your insurance professional knows the difference between what you need and what you want, because again, they are supposed to be that fiduciary for you. They're going to do very similar things like John and Frank are going to do, which is sit down with you and understand what you need in its totality. It's a very transactional relationship, as I like to say in the home ownership world. And I think that needs to change. We need to change from thinking, hey, let's just go online and quote with insert the animal's name or animal type online and hope that I get something back that makes a little bit financial sense. It doesn't work in the Florida market, hasn't worked in 30 years. It never did. That's why the broker market is so strong in Florida, because there are good people out there who want to do the right thing, that want to provide you with the right information. Unfortunately, you have to dig up the dirt to find the gold, right? Well, guess what? You don't have to dig any further. You got three pieces of gold and a trusted advisor here in the technology world who can help you with that.
Thank you. Yeah. So pivoting a little bit on to talking about leverage of equity, John. When does it make sense to tap into equity, or does it make sense? Just get if you can talk around. So we've got our home now, we've got insurance and everything else, and we're paying principal rather than interest, all of those great things, right? How do we tap into that equity now? When is it good to think about things like that? If there was someone out there in the audience wanting to do some more sort of financial knowledge around that.
Yeah, there's a couple reasons to use that equity in your home as leverage. Number one, if you're a business person, right? And you see an opportunity and it's in your zone of genius, you know how to do your business better than most, and you understand how your business works. And rather than quickly just trying to go get maybe a loan from a bank and spending a whole lot of time doing that, you could just immediately use the leverage in your home if you have an all-in-one mortgage to purchase that asset or purchase that piece of the business or purchase that piece of equipment. That's one way that makes some sense. But again, make sure you're not taking like a new business risk where that's not necessarily a zone of genius, but boy, you think it's going to work. This is probably not a good idea to use the leverage and equity in your home. The other place where this can really be powerful is to take some of that leverage in your home. And if, especially if in every situation is different, so I want to stress that, and this is not individual financial advice right now, but I've seen this happen in some cases where somebody's a bit behind in their financial planning for whatever reason, and there's a lot of reasons for this. It is possible if you're making a fairly good income and you qualify for an all-in-one mortgage to leverage that for actual investing and wealth building purposes. And you have to be extremely careful with this. It doesn't mean that you go out and you buy you're investing in highly volatile equity securities against the leverage on your home, but there are strategies that you can manage the risk on very, very well. And one of the things I did when I was on Wall Street is manage risk. So I spent a lot of time, behind spreadsheets and calculators and the like, figuring out how to manage risk. And there are ways that you can manage your risk and also build your wealth through proper investing, but be extremely, extremely careful with that type of idea. Where I've seen it work best is in that business framework. And a lot of times a business owner will, maybe they're in the blue collar field and they need, a very expensive, call it a bulldozer, it's going to cost them a couple $100,000. They can literally buy that bulldozer today, eventually finance it through their business, but they didn't have to wait on the timing to be right and going through the process that banks will make you go through. And then they can pay down that loan with Frank once they get the business loan going. So there's just so many different ways to do it. And it really depends upon the person, your risk tolerance, and where you are in terms of building your life the way you want it to be using the tool we call money.
Yeah. I think for me, you've hit the nail on the head there. It's about the risk tolerance for individual people, right?
Right.
What you're comfortable with. Going back to the insurance, it's like how much do you want to be insured and pay for to feel good and have a good night's sleep? It's those
Right.
things was really important. So you giving that advice, but also tapping into what people really want is really important.
I could even give it a real quick, I'll just give you a real quick story. A client of mine recently had a back issue. And I don't know anything, I don't really know exactly what the problem was, but the only options he had were it was going to be a risky surgery and would definitely cost him at least 6, maybe 12 months of rehab, or he could spend $35,000 and get another another thing done to his back that would be basically you'd walk out the next day and you would be fine. Now, it seems too good to be true, but did the research and found out that it was actually true. He was able to take money from his house, home equity. He didn't have $35,000 just laying around. He was able to take that equity out of his home, get the surgery that he needed literally the very same day, walked out of the surgical center and
Fantastic.
hasn't had any problems since. And this has been over a month ago. And it just allowed him to do it. It allowed him that financial flexibility to be able to do that and not have to go and sell. It happens to be the last couple of months, the equity market has not been kind to us. So he didn't have to go out and sell assets for that. And now, as we get into, don't want to date this webinar so much, but we just had a very nice recovery over the past few weeks, and we're starting to sell some of his assets at much better prices, and he's going to use that to pay back that loan.
Yeah.
So there's all sorts of different ways you can use this. It's financial flexibility and risk management, even though when we tend to think of it, we think of it as leverage, and leverage is bad, but it can be used as a risk management tool as well.
Yeah,
Can
I
I
love
add
that.
one? Can I add one thing to that?
Mhm.
John kept on mentioning, of course, the all-in-one product and leveraging. But view it this way. Yes, you have the option of using your cash equity, but you're holding your own money dollar for dollar. Obviously, it's more laborious than that. It's pretty cut and dry, but not for this seminar. At the end of the day, you're taking the bank out of play. All the money you're saving by paying interest, it's your money anyway.
Hmm.
So why not invest it towards whatever, whether you need the machinery, you're just not giving it to the bank. You're
Yeah.
holding your own money.
Keeping it yourself.
That's the key. It's keeping it yourself, and also it's these creative, out of the box things that a normal person like myself wouldn't think about or know how to do. And so we walk around for weeks going, "Oh my God, I need to do this. I need to pay for this," or "I really want this surgery." Whatever it is, how am I going to do it? But talking to the you as advisors to really go get creative in building a really great strategy and solution of leveraging what you have with minimal risk. And I think that's the key important thing, right? So Frank, what about refinancing? Let's talk about refinancing a little bit if you want to go through some of those strategies there.
All right. So obviously, traditionally speaking, the examples I used earlier, pre-COVID, sub 3% interest rate, who would refinance, right? I mean, and I've had that many, many, many times to the 30 people that I refinanced last year, including some of John's clients. Why would they do that? Again, do you want to pay 3%? Your payment never changes, front-loaded interest for the next 27 years, or would you rather pay off your mortgage in a reduced time by paying principal first? So why would somebody, well, to refinancing, people are starting to traditionally refinance because rates were 7.5. Now they've trickled down into the sixes. Again, market doesn't like uncertainty. We've all seen that per John's comment, the war, so on and so forth. Interest rates started going up, stabilizing now because things seem to be stabilizing. However, as interest rates go down, what are people going to do? They're going to call me or any other lender to refinance. No problem. They're going to save a couple $100 or five, six, $700, pay 4,000. At the end of the day, it's traditionally what we do. And when the rates come down again, we're going to chase the thing that's most important thing to us. That's interest rate. In my product, I'll conclude the answer to your question with this. You refinance one time. Every time rates go down, you don't have to call me to refinance or any other lender. Why? Because you get the benefit of the lower rate every month. So let alone your payments constantly declining because you're paying principal first. contrary to a traditional loan that stays the same forever because it's front loaded in interest for 21 years.
Mm.
My product, you refinance with me, assuming you currently own your house, or purchase with me, you never have to change your mortgage again because you get the benefit as the market decreases.
I love that, Frank, and I think it's really important to keep honing that in, right? Principle first. Don't pay the banks.
Well, take away the concept of you hit the nail on the head. What is the most important thing to you? We're out here educating you that it's not interest rate that we're all
Yeah.
chasing the next eighth lowering rate. It's how many interest dollars you're paying on your mortgage while paying it off in one third or a quarter of the time of a
Yeah.
traditional front loaded interest mortgage.
Okay. So we're gonna move on to real life strategy and common pitfalls. This is our third segment. What's one mistake you see homeowners make over and over again?
Chasing interest rate for me
Talk
personally.
about, yeah.
Yep.
Thinking that they need too much coverage. Everyone believes they need to have everything at 100%, right? You need 300,000 in content. If you have $1 million house, you need to have hurricane deductibles at 0 or 2% or any other perils under 2,500. There are some requirements that Frank or the mortgage company may have. That's to be fair. But at the end of the day, not all mortgages are the same. So thinking that you have to go into something with 100% coverage or high levels of coverage without having higher deductibles, there are levers that can be pulled to reduce costs to make sure that you are covered, even if you don't have a mortgage or do have a mortgage. Again, coverage is not all the same. Let your person speak to you about how to make sure you can be covered without no coverage. Don't go with no coverage. I beg everybody, with hurricane season coming, it is right around the corner. Please don't have not any coverage at all. It just is not something that's advisable in Florida.
Yeah, and for me, it's a couple of things. Number one is be careful not to become house poor because and sorry, Frank, but a lot of times, hopefully not on purpose, but I've seen a lot of people become house poor in that they have this great house, but then they can't, they're really stretching for that mortgage. And the second one, I'm taking two, guys, sorry. The second one is not viewing your home ownership as part of your overall wealth management plan when it's arguably often your biggest asset that you have. And if it's just sitting there illiquid,
Mm.
and it's the biggest asset that you have, that's just an enormous piece of your wealth that you are just, I hate to call it just, it's not really just wasting it because over any 5 year period in history, home prices have gone upward and have generally beat inflation. I don't want to argue that point. I think that's correct. But you reduce your financial flexibility. And when we talk about wealth management, it's yes, it's we want to grow assets, but even more than that, we want to protect that wealth. And without financial flexibility, without protecting the asset, you can lose that financial flexibility in a heartbeat.
Mm.
So that would be probably my biggest mistake that I see homeowners make.
Frank.
Can I add to that? So, John, you mentioned it's the biggest asset. That is correct. But here's the real problem. It's your biggest liability.
Mm.
And here you're
Yes.
going 30 years, then you're refinancing 6 years in. Now you're at 36 years. I mean, we're owned. So it is your biggest asset, but it's your biggest liability. So why not take that liability away to give you the financial flexibility? And back to your qualifying, I agree, but there's pretty stringent, even across the board, since 2008, very stringent guidelines. They don't allow you to really over leverage yourself for the most part. But with this product, which is a constantly reducing risk product, why? Because you're constantly reducing your liability. So with us, we have strict qualifying. We have a quality control call as soon as you get your contract in or take your application from a third party internally, unrelated to me. And at the very end, before you get your clear to close of quality control, they want to make sure this product's right for you and your financial needs unrelated to Frank. Did Frank do a good job explaining it to you? Hence why we've had a flawless, after doing $3 billion on this product last year alone, zero clawbacks. Why? Because it reduces our risk, the consumer's risk. That's
Yeah,
it. So,
thank you. No, that's great. So, what would each of you tell someone who feels like home ownership is really out of reach right now?
call Frank.
Oh,
Call
Frank.
Frank.
I
Everyone,
mean,
call Frank.
well, I
Oh,
can
Frank.
determine that for you. I would say that maybe right. Maybe they have some credit issues. Well, I think with this group here, we have people that can help you with your credit, unrelated to me, but we'd hand it right off to the credit wizard, the credit guru, actually. People that it's true guy that will go in and help them on the credit side of it. Or if they don't think it's for them, a typical buyer I had this, or a buyer I had this weekend was not he was a first time home buyer. He's not a candidate for my principal first product, just not at this time. But I said to him, well, you are actually ready if your mother would co-sign for you. And she did. So my point is there's never the wrong time to look at it. Let's see where you stand, look at your overall picture holistically and figure out a game plan for you.
Hmm.
Whether it pulls John in, Rudy in, Rudy will always be in once you do purchase, but maybe or refi. Maybe in the meantime, we just John and I collectively, maybe they have some assets that they're not accounting for. We can add more income to their purchase to their qualifying that John mentioned earlier. So that would be my advice. Let me take a look at your picture. That's
Yeah,
it.
And I
yeah.
think to piggyback off of Frank is again, not everything is going to happen 100% of the time instantaneously. It
Hmm.
may be a situation where Frank looks at something, sends over to John to help start fixing. I get involved with the conversation, reduce cost. Now we've essentially adjusted your credit because now you have more money to put down on those cards that may be hovering around those numbers that you're not happy with. So you can reduce your overall debt, right? Because John's helping you, where now you do qualify in a situation that helps for Frank. So again, this whole one size has to happen in one shot. I could tell you that maybe happens, 30, maybe 40% of the time, but the rest of the time there has to be work. Nothing is gained easily by not working. And that's what the best part of having three, we call ourselves the three musketeers in some way here, because we're here not just to make it happen quickly. It may take some time, but we're willing to work on it with you so you can be successful. And there's not a lot of people out there, agencies, companies in general, that are going to treat you like not just a number, but a human being that needs help to make a change. And that's the best part about working with principals, owners, people who are on the higher end side of getting the job done that have a vested interest in your success. We care just because we do. And that's the best part about it. So getting you to your financial freedom, however, John's going to help you find it, how Frank can help you execute it, and the journey we use to help the vehicles that you're going to do and participate in. Again, not all one size fits all, and that's okay because we got a guy who's got something all in one.
Yeah.
Yeah. And I would say this. So one of the big differences with Guardian Rock Wealth is I absolutely, and I'm very careful with who I work with. Okay. But I have 5 clients right now who are not high net worth, but I find them to be quality individuals. They're younger. All 5 of them are younger. And one of them just bought his first house 2 years ago. We got him there. It took him 3 years to get there. I've got another one that's in year 2 of his 3-year plan to get there to buy his first house. But the number one concern I have for them is don't become house poor and put yourself in a position where you have no financial freedom. But well, you have a house, and that's just no fun. Trust me. I've been there when I was much younger. So don't do that. But if you have a plan in place, I go 9 times, maybe it's 8 times out of 10. There is a path for you to home ownership if that's what you want. And we do spend time with folks deciding if it's really what they want, because home ownership is not for everyone. If you do the actual math at certain times during the cycle of real estate prices, sometimes it's much cheaper to rent, and that might be the right choice for you. So I help people decide what their best life is based on what they really want. And a lot of times when I get to asking the why question, like, why do you want a home? It turns out that, really, for their best life, they should be renting. And that's okay too. But there's always a path that you can follow. And I enjoy figuring that out. I did have one other client that was more of a high net worth, and he wasn't able to buy a house for some interesting circumstances. We got him there within 3 years, but it does take 3 years. To Rudy's point, it's not something that you can just put in the microwave and hit 30 seconds and suddenly you're ready to buy a house tomorrow. You got to do it. You got to follow the plan. You have to be disciplined and actually do some of the hard things to get there, but you absolutely can get there if you want to.
I'm going to add this to it. Here's what one thing you're going to get from, or anybody's going to get, any referral or whoever it may be from these three people, one of, including myself. You're going to get full transparency. You're going to get us to deeply look into your personal situation. And I'm just as happy telling you you're good where you are right now. You don't need to do anything. So that's what you're going to get from us, transparency, period.
So you've all kind of answered the last question was with if someone buys a home in the next 12 months, what should they do first? And I think probably the first thing is they should talk to each and every one of you three. So that's the first three things that they should do to really understand that whole financial strategy, the lending part, the insurance, and really over long term, that whole how much are you earning, how much do you want to save, how much you want to spend on mortgage. All those things are really important to do first before you buy a home.
For
Yeah.
sure.
Yeah, most
Okay.
definitely.
I'm just looking at time. We're almost at 11:30. I know we did have some quick rapid fire questions, but I'd like to leave some time, a couple of minutes for Q&A if there was any questions at all. You can either put it in the chat or bring yourself off mute. I didn't check the chat. Let me check the chat. Is there any questions in the chat? No, there isn't. Okay.
Nothing in the chat just yet that I'm seeing.
No, and it doesn't look like there's any
No question is off limits. And we'll send everyone out, an email too that has our contact information if you'd like to reach out. None of the three of us are big into the heavy sales. Yeah, I really like to teach is what I like to do. I like to show people what can happen. So we'll just have a conversation if you want to chat and just determine where you are and what you really want. Maybe ask the why question, and it's fine either way.
First, right, John?
What's that?
Education first.
Yeah,
we're here to
absolutely.
educate for sure.
Always about the education, especially this, because it's everybody's lives, like it's the livelihood of people. So I always say it's always education first, get people to feel comfortable and understand where they're going in the direction and how things are moving, right? So
And we did talk on a very high level here today. I mean, it does get complicated. I hope we didn't, blow anybody's minds in terms of, wait, what? Now, I don't think I really understand this. If you understood this based on this webinar, then you're way smarter than I am, because it does take a minute to get your mind around it. And it is frankly not what we have all been taught for the past 20 or 30 years. This is different. And that's why it's so valuable if you take advantage of it.
yeah.
Yeah, like you said, for 83 years since the Great Depression, we know one thing: 30-year fixed mortgage, interest rates the most important thing to you. Um, and that's the way the banks have taught us. We're the only country that mortgage banks like this, but it's all we know. So all we did is flip the script and had federal approval to do it and to help the consumer truly. So I'm happy to get on with anybody for a one-on-one just to even roundtable it, educate anytime.
Thank you. Rudy, anything from your end to wrap things up?
Of course, insurance doesn't have to be difficult. The person you're working with that you should feel like you should be able to have a conversation with very frankly. If you don't feel that way, then you're probably working with the wrong person. There are many carriers here in the state of Florida and across the country. We'll just talk specifically about the state of Florida that people will recommend that have been around for a short period of time. Here's one thing I will say. It's very important for homeowners, anyone who has properties in the state of Florida, to make sure they don't get caught up in the new hype. Just because somebody's come into the state and has new options and better pricing does not necessarily make them a better option. Understand that having time in market, paying out claims
That's
in
a very
market, being through storms in market is going to be
very
imperative. You don't
nice.
want to be stuck with a situation where
I'm over
you have a
60.
claim and you have to deal with it and they're not there to help you. We only deal with the carriers who've been here for a while, that have been through category 3 or larger storms, because they do pay out. So just
Right.
as much as getting a policy is important, picking the right broker, the right agency who has the right relationships with those carriers are just as important, because not all insurance is created equal. That's why we're here to help. And that's why having these conversations is imperative. Don't just assume, because we always know what happens when we assume.
Yeah, no, absolutely. Thank you so much. I'd like to say thank you as well for having me. It's been great moderating this, and I've learned a lot through this as well. You guys are a wealth of knowledge. Every time I speak to you, I always learn something. It truly the three musketeers, and I encourage everyone to reach out and just any questions that John, Frank, and Rudy are always open to text and just answering questions because they are a wealth of knowledge. And also, if they don't know, they'll find out. That's the key thing. They'll never say they know. They will find out if they don't know. So that's the key thing as well. So a whole other resource behind them as well. So anything you need, this is your team. So yeah, thank you so much, guys. Have a great rest of your day and week, and hope to see you all soon.
Thank you.
All
Thank
right.
you,
Thanks,
Rita.
everyone.
Thanks for attending. Have a good day.
Over?
Over.
No, he's getting started.
Maybe it was.
He's getting started. Those are the vendors. The things.
So soft.
Thank you. All right. All right, guys. We'll
I think
circle up
I think
in a
you'll just
little
have to
bit.
close the link, John, and then everyone will just get logged off.
Okay.
I'm going to log out. We can reconvene at another time.
Yep. Sounds good. Thanks.
Thanks. Bye.
All right. Bye-bye.